All right, ladies and gentlemen, it is time to give you the game. This is the day that the Lord has made, and we will rejoice and be glad in it. Happy Tuesday, ladies and gentlemen. For those of you that are coming on, please hit the like button, hit the share button, and tag Lolly Dolly everybody and let them know. Prophet Ramon, the squad, and the Ramon Preston Show. We are live in his house right here from the beautiful Buckhead community of Atlanta. And it's Tuesday. What an amazing day it has been, and what an amazing day it will continue to be. For those of you that are coming on, again, please tag someone, like the video, share it. Make sure you're subscribed to our YouTube page. Make sure that you're following me on other social media platforms. I want to thank all of you for continuing to help us reach the world with this message of economic deliverance, economic breakthrough. I truly believe that this is a part of my assignment in this season of my life, to educate and to impact and to inspire God's people when it comes to finances and business and investing and wealth building. And the results speak for themselves. Just the people that we have been able to contact and communicate with and converse with, and to hear all the amazing testimonies and success stories. I'm just extremely thankful. I'm grateful. I'm honored to be a part of your growth and your success. Please make sure you drop in the comments what city, what state, what nation, what country you're representing. So please put in the comments where you are, where you're representing, your tribe, your community, your country, your state, your city. I want to know that. And guess what? Everybody else wants to know. We have people from all over the world, literally, who watch the Ramon Preston Show. I can't even begin to name all the names of the countries that represent the viewers who watch the Ramon Preston Show. But wherever you are, on any continent, in any country, in any state, in any city, I want you to know that we love and appreciate you. We just thank you for everything that you do to support this movement. I want to give a shout out to our YouTube subscribers. And for those of you that are watching, whether you are on YouTube or not, I need you to subscribe to our YouTube page. We are almost at 6,000 subscribers. We want to cross 6,000 subscribers at least before this month is out. So please help me make that happen. How can you make that happen? Hit the doggone subscribe button. Hit the bell, ding, 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 subscribe to the YouTube page. And make sure while you're in the habit and in the mode of subscribing that you run over to LinkedIn and search Ramon Preston. And when my smile comes up, I want you to make sure that you follow me on LinkedIn. We have almost 7,000 followers on LinkedIn. And so that's a very, very valuable platform that we use as well. And of course, Facebook, Instagram, Twitter, TikTok, Snapchat. You can find me at Ramon Preston as well. So welcome to the Ramon Preston Show, ladies and gentlemen. I am your host, Ramon Preston. And guess what? Every Monday through Friday, we show up here to share with you information on how to properly start, structure, and scale your business, your ministries, your income streams, and even your wealth building dreams. And everything that I share with you on this show, for real, is an extension of what our company is all about, whether it's our consulting division, our coaching division, or our training division, or all three. The information we share with you is an extension of that. First of all, it's an extension of my life. So I'm not going to share nothing with you that I'm not living. I'm not an idealist. So I don't live with these hypothetical, theoretical, idealistic views that I try to share with other people. Now, whatever I'm sharing with you, I'm living. And I am either successful in it or I'm experiencing what's going to make me successful in it, and then I share it with you because I know it has to be practical, it has to be very tactical, and it has to be strategic. Otherwise, it's not going to work for you. So welcome to the show. Today, I want to talk to you about creative tax strategies. Now, just in case you missed yesterday's show, oh my God, we were talking about how to maximize your business deductions. Now, I don't know how savvy you are in business or how aware you are of this Q4 window, this fourth quarter window that we're in, but most of the wealthy people that you will study, if not all of them, and the major companies and corporations that they just run like trillion-dollar and multi-billion-dollar companies, they use this fourth quarter to make final decisions on where they can minimize taxes and maximize profitability through things like business deductions. And here's the truth. Most of these wealthy people in these trillion-dollar and billion-dollar companies, they have already projected things way before this fourth quarter. So it's not like millionaires and wealthy people and these major corporations are just sitting around scrambling, trying to figure out, man, how am I going to find a business deduction? Where am I going to put my money? How am I going to get tax write-offs? They're not really doing that. They have already projected that out. And I'm going to be talking about that this week as well. They've already projected it out. But for most small business owners, for most of the 32 million businesses, small businesses in the United States of America, for most of Americans who may work jobs and may have a side hustle as a network marketer, a 1099 contractor, or maybe you have a business on the side. Most of us on that level, and that's almost everybody, because there are 32 million businesses in America, small businesses, and we all make them up because they consider small businesses to be any business that has 500 or less employees is considered a small business. Now, of course, a lot of those businesses are doing well, but nevertheless, we are a part of that community of 32 million businesses. If you look at the employment rate in America and those who are in the workforce as W-2 employees, they and we make up almost all of these numbers. Now, the reason why I'm bringing that up is because we are the ones in these groups who are not doing our due diligence to use times, windows like this fourth quarter to focus on maximizing profitability through minimizing our tax liabilities, through developing creative tax strategies. And so that's why today I want to talk to you about creative tax strategies. All right? Because if you are going to maximize your business profitability, and the truth is, and I mentioned it yesterday, if you're going to maximize your profitability as a W-2 employee or as a 1099 contractor, and of course, as a business owner or entity owner, if you're going to maximize your profitability in any of those income levels, guess what? You're going to have to figure out creative tax strategies to minimize those liabilities. And the biggest liability is going to be your tax liability. Most people don't even pay attention to the fact that your biggest bill is your tax bill. And you may be saying, yeah, but I ain't got no business. Well, if you work on a job, you still paying taxes. Look at your pay stub. And whatever's between gross pay and net pay, you're going to see that you're being taxed. They busting you right across your big old head with them taxes because most people have no creative tax strategies. So this applies to those of you that are W-2 employees, 1099, independent contractors, and this also applies to business owners, those of you who have EIN numbers that are wrapped by LLCs and Incs, okay? So that's what we're going to be talking about today. I want to encourage you, if you missed yesterday's show in our discussion on how to maximize your business deductions, I want you to go back, especially if you do not have certain creative tax strategies for your finances, for your independent contracting, for your job, for your business, go back and revisit and watch yesterday's show, because today is somewhat of a follow-up from yesterday. I'm just taking it a little deeper. So the creative tax strategies are going to be really based on you understanding the basis or the fundamentals of the tax system, okay? So there's a tax system. There's a tax system, particularly in the United States of America, that imposes taxes on individuals, corporations, trusts, and estates. And in order for you to minimize your company's tax liability or your personal financial tax liability and maximize your company's profitability or your personal financial profitability, there's some things that you're going to have to do, because you will not see the positive effects of creative tax strategies if you don't understand the financial categories for tax purposes. Okay? So let me say that again. If you're wanting me to give you, or if you're looking for somebody to give you, or you might be Googling creative tax strategies, I need to figure out ways to lower my tax bill. I need to figure out ways to minimize my taxes and to get more deductions. Well, in order for you to even implement those creative tax strategies, you have to look at those strategies through the lens of the three financial categories for tax purposes, okay? So that's where I want to start at. I want to use as a basis, because your creative tax strategies have to be viewed through the lens of the three financial categories for tax purposes. Now, the reason why this is important, because you hear people say it, but you don't always understand it. Have you ever heard somebody say, yeah, all money ain't good money? Have you ever heard that? All money ain't good money. And then you're thinking, like, what do you mean all money ain't good money? Isn't all money money? No, not necessarily. There are different types of money. Now, a more sophisticated way of saying that there are different types of money is to say that there are different financial categories, particularly for tax purposes. So I want to give you these three financial categories for tax purposes, because I want you to view your creative tax strategies through the lens of these financial categories. That's going to be very, very important, because what you don't want to do is you don't want to implement all types of strategies for the rest of this year. Then you wait to get into 2022. You go to TurboTax, you go to the bootleg accountant, you go to somebody to do your taxes under the table, you go to H&R Block, or you go to a CPA or accounting firm, only to find out that the categories you thought you were being taxed in were the wrong categories. So that means you implemented creative tax strategies, but you implemented them in the wrong financial categories. So you thought this income was this type of income. You thought that income was this type of income, and you realized that the tax liability of certain income that you had coming in, that tax liability, it fell in a different category for tax purposes. This is why you can't be listening to. Now, let me just say this. I'm not a tax strategist. I'm not a tax expert. I pay tax strategists and pay tax experts to help me. I'm just sharing with you some game that I have learned throughout my entrepreneurship journey that has helped me to minimize my tax liabilities and maximize my profitability, and has helped me to effectively and efficiently and successfully implement creative tax strategies, because I knew how to view these strategies through the proper lenses, meaning that I knew what kind of money was coming in. So if I had money coming in from 6 or 7 streams, income streams, I knew that those income streams represented different financial categories for tax purposes. Am I making sense? So the type of money you make on your job is a different type of money you make as an independent contractor. The type of money you make as a network marketer is different than the type of money you make as a real estate agent. It's different than the type of money you make as a minister. It's different than the type of money you make as a LLC owner. It's different. It's a different type of money you make as a LLC that's treated as a different type of entity. So these are different tax categories. I'm going to simplify it for you just to give you what I use and what the people around me help me to understand, so that I have something to work with, so that the lens that I see my creative tax strategies through, that I utilize throughout the year, make it easier for me. And again, because I'm not the expert, I'm not licensed, I'm not, like certified to do this for anyone. So I don't do this. This is not what I do for a living. I just share the game. I'm an entrepreneur. I'm a business owner. I'm the one out there trying to hustle and grind and go get it and make it happen to make the income, so that I can pay experts to show me how to view that income. But a lot of this information you might not even get from your expert. They might not even be educating you. They might not even be training you or teaching you on that, because they may not be in the educational business. They may not be in the training and teaching business. They may just be in the business of providing the service for the things that you need done with the income that you made. So that's one of the key footnotes you wanna remember, even in today's show, that you can't always depend on experts not to do this. This ain't about them doing. It's about you depending on them to teach you principles that they have learned to be the experts. It ain't their job to necessarily teach you that. It ain't their job to necessarily train you on that. Now, of course, if you're asking the right questions, you're going to get the right answers and the right information. And if you're dealing with experts and people in this space or any space of professionalism that they do not want to at least give you the right information, they don't want to teach you the fundamentals of what they're doing for you so that you can make an educated decision and be more intelligent with regard to that profession, then maybe you need to find another expert or professional to help you in that. But nevertheless, you can't just depend 100% totally on them teaching you and training you on these things that you got to get the game on. You got to get educated on. This is why all the clients who are in my coaching program, I expose them to this teaching. I expose them to this training, whether it's in person when we host workshops, masterminds, boot camps, or whether it's them going to our online platform and educating themselves through the content and the courses we have in our business and financial training. Guess what? They still have to learn this. And you're no different, whether you're in one of our programs or not. You have to learn this, and you've got to make sure you're learning it properly. And you may not be the expert, you may not be the professional, because I'm not the legal expert, I'm not the legal professional, I'm not the tax expert, I'm not the tax professional, I'm not the guru or the mogul when it comes to the legalities or the technicalities of these things that the experts are extremely good at. But I gotta know enough to at least know what I'm doing when I'm running the day-to-day operations of my business. So today, right? My business is running. We're doing deals. We're making money. We're generating revenue. We got streams of income coming in. I have to at least know enough about these things so that I can know what kind of money is coming in. Because if I have a better idea of what kind of money is coming in, and I understand the fundamentals of finances, the fundamentals of accounting, the fundamentals of tax strategies and business deductions and maximizing profitability, I got to know the fundamentals of that, because then it's going to better help me to allocate that income in a way that I don't end up in tax trouble, that I don't end up in financial trouble, that I don't end up in cash flow trouble, that I don't end up in business trouble, because I have been able to allocate everything effectively, efficiently, and successfully. So in order for you to implement creative tax strategies, you have to view these strategies through the lens of the three financial categories for tax purposes. So what are those categories? I'm gonna give you all three. So 1, 2, 3. You have the labor income category. You have the active income category, and then you have the passive income category. And again, whenever you're making money, or whenever your business starts to make money, or whenever you start generating multiple types of revenue, you may have to check in regularly with your tax expert, with someone who you have in what I call your credibility kit, that you can run these things by to make sure, hey, I have this new income coming in, or I'm generating revenue over here. Is that income treated differently for tax purposes than this other income? You need to ask those questions to your accountant, to your CPA. And you can't be cheap and cheesy. And you can't just be trying to get over listening to internet gurus, including me. Because you can't just be asking me about a whole lot of stuff I'm asking experts about. Because if I create new streams of income, like there are 3 or 4 new programs that we have rolled out just within the last few weeks in our company, right? Well, these new programs are centered around licensing. They're centered around intellectual properties. They're centered around what is it? They're not trademarks, but they're centered around royalties. Some of the programs that I have rolled out are centered around licensing, certifications, royalties, trademarks, intellectual properties. So guess what I've had to do? I've had to talk to the tax strategists. I've had to talk to the CPAs. I've had to talk to certain attorneys, patent attorneys, trademark attorneys, attorneys who understand IPs and royalties. Why? Because I want to make sure, not just from a legal perspective, but I want to make sure even from a financial perspective, that these new streams of income, of revenue that I am now generating, that I understand how that income is going to be treated for tax purposes, because that's going to weigh heavily and impact what my creative tax strategies do for me, if they do anything for me. Because sometimes they can hurt you. You know what I'm saying? I'll give you a simple example. You around here thinking you writing everything off. So I'm gonna write this off. I'm gonna write that off. I'm gonna write this off. I'm gonna write that off. Only to get to the tax person next year and they like, sorry dog, sorry sis, we can't write none of that off. Right? That's what happens. And then you realize that you implemented what you thought were creative tax purposes, but they were not through the lens of financial categories for tax purposes. And guess what happens? You find yourself in a world of trouble. So these are the three categories, the 3 financial categories for tax purposes. We have the labor income category, the active income category, and we have the passive income category. Now, I want to just simplify this for you, and let me just give you a heads up. For those of you who find value in what I'm talking about, I want you to understand that we just extended an offer yesterday for an upcoming workshop that we're going to be hosting in a couple weeks. This workshop is going to be a live event. You can join me in person here in Buckhead or virtually for the live event. This workshop is going to be on sales and marketing. So we're actually merging 2 workshops in one. But while you're waiting, we made an offer for you, and you can take advantage of it by clicking the link in the video in the description, and it should be in the comments as well. But you can take advantage of this offer for $29. Like, come on, books cost more than $29. So you're not only getting access to our upcoming sales and marketing workshop, but I'm giving you access to 2 other full workshops that we hosted. One was on holding companies and business systems. The other one was on financial systems and creative tax strategies. So I go over all of this and more in one of those workshops when it comes to financial categories, creative tax strategies, accounting, financial literacy, and a whole lot of other things that center around financial systems. So I want you to take advantage of the offer to get all 4 of those workshops. The virtual version is only $29. You can actually get access to all of them and join me in person for only $69. So don't let $29 or $69 stop you or hurt you from ending this 4th quarter the right way, having implemented the correct creative tax strategies. And that's one of the reasons why I added all those other workshops, particularly the financial workshop, into this offer. I know sometimes people be listening to people like me and they always thinking, oh, they just trying to sell something. No, we not. Sometimes we're trying to help people. It costs to run a business. It costs to show up every day and do this. It costs to be the boss. And sometimes we have to add some price to it, number one, because if everything is free, you're never gonna value it and appreciate it, number one. Number two, if everything is free, which is probably number one, we gonna be out of business. Because everybody can't give everything away. Somebody gotta make money to keep things going. So outside of that, don't let $29 mess you up to the point that you're uninformed, you're uneducated, you're tax illiterate, you have no strategies, and then you go to 2022 to the tax person and realize because you didn't know this, you end up paying way more than you want to pay and end up in a whole lot of mess because you were unwilling to take offers up like this offer. I'm giving it to you. I'm not just telling you what you need to do. I'm showing you how you need to do it. So these are the 3 financial categories for tax purposes. Everybody, all y'all that's watching me and listening to me today, all of us, we all fit into one of 3, if not all 3 sometimes, of these categories. So we have the labor income category. The labor income category reflects W-2 employees who work on a job. Okay? So let me break this down for you. Man, when I start going deep in this stuff, I don't know how time just goes by like that. So we have category number 1. We have the labor income category, right? So these are the W-2 employees who what? They have a job. This is labor income. Why is it labor income, Ramon? Because you are working on a job, laboring to generate that income. That is why you're considered to be a W-2 employee, because you have a job. Now, when it comes to the financial categories for tax purposes, this is the highest tax category that pays over 30% in overall taxes. So those who have jobs, W-2 employees, they fall under the labor income category for tax purposes. Now, all of you internet experts who know way more than I do, I just told you I'm not a doggone tax strategist, a tax expert. I'm a business owner. I'm an entrepreneur who pays people who are experts and strategists to help me understand these things so that my business, okay, not my opinion on social media, but my business continues to increase. So for all of you that have your own opinions and views, but you have no business and no receipts to show that you actually have success in your business, I don't want to hear any of your any of your opinions. But for those of you who want to learn something, this labor income category, which are W-2 employees that have a job, are the highest tax. And see, you have to, at least from the beginning or the onset of you learning these financial categories for tax purposes, even before you implement creative tax strategies, you have to be aware and understand that you are the highest taxed. This is your biggest expense. Don't you know it is estimated that the average W-2 employee who has a job, who is the highest tax, they work at least 3 to 4 months per year, just to pay taxes. Now, do you believe that? Do you believe that? Let's do the math on it. Let me go over it again. The labor income category for tax purposes, which are W-2 employees that have a job, they are the highest tax. Their overall tax typically range from 30% and up. And that depends on where you live. If you live somewhere like California, New York, it's probably higher than that. Truth is, you could be living in the hood and it could be higher than that, because you could be taxed up on top of the tax with other taxes, all right? Especially if you're around the mob. But my point is, if 30% is the average tax, some places it's 40%. They're trying to push it to 50% in some places, but let's just say conservatively that the average W-2 employee that has a job pays at least 30% in taxes, right? That means it is estimated that you are working 3 to 4 months every year just to pay taxes. How do you do the math on that? Well, 30% is a third. 30% is a third, right, of your income. So whatever the dollar amount is that you make, think about subtracting a third from that. But you are working. So you work 100% of your time only to give a third away, right, of what you got paid, but you still worked 100% of your time. It's not like they're subtracting a third of the time that you work because a third is going to taxes. So if you work 100% of the year to give a third of that year away in taxes, that means you're working 3 to 4 months just to pay taxes. This is so critical for you to understand. So now you have to at least figure out creative tax strategies while you're working your job. Don't mean you got to quit your job. It means you need to implement different strategies while you're on your job. This is why studies show, and we're talking about financial studies. The IRS has done studies. TurboTax has done studies. H&R Block has done studies. The Dave Ramseys and the Susie Ormans and other gurus of the world have done studies, and they all have unanimously said that the average W-2 employee, like over 80 million of the people who work W-2 employment jobs, right? Over 80 million of those people, which are the average number of people, right? The average employee pays too much in taxes. So that means this 30% can actually go down when you implement the right strategy. So this is the highest tax. This is one of the reasons why, if you have a job and you're trying to figure out ways to increase your income, it may not be the best decision for you to go get another job. Because if you just go get another job, you time this by 2, then what are you actually timing by 2? Your taxes, right? This is why you need to keep your first job. Don't get a second job, but start your first business. Boom, mic drop. Did you catch that? I say you don't get rid of your first job. That's really dumb. And I'm sorry to tell you, if you got a job and you finna let the job go to start a business and you're broke, you goofy. It's just ridiculous. You keep this job and you maximize the opportunities for strategies on this job by minimizing this tax liability, but not getting a second job. We want to get our first business because we're going to use the business to leverage the tax liability on this job. That's the game. Why am I going to do that? Because the labor income category for tax purposes is the highest tax category. You got it? That makes sense? Okay. So number 2, the second income category for tax purposes is the active income category. This is the second category, the active income category. The active income category reflects 1099 self-employees. These are the 1099 self-employees. But here's the thing. You don't have a job. You don't have a job. As a self-employee, here's what you do. You own a job. Man, I'm giving y'all game for free. You better catch it while it's hot. You own a job. So you don't work on a job. You don't have a job. But as a 1099 self-employee, you own a job. And here's the thing. The taxes paid in this category typically range between 20% and 30% in overall taxes. Now let's go through this. Let's walk through this a little bit. If the active income category is 1099 self-employees, which means that you're not the highest taxed like the labor income category. You are taxed lower because it averages 20 to 30%, but you don't have a job, you own a job. Why are you still being taxed almost just as high as the W-2 employees? You know why? There are a few reasons why. I'm going to give you a couple. I'm going to give you a few here. Number one, the reason why most 1099 self-employees who own a job but don't have a job are taxed almost just as high as W-2 employees in the active income category is because their mindsets have never changed. Because most of these people are still W-2 employees or left being a W-2 employee to become a self-employee, which means they left their job, but now they own a job. Because you still got to do everything in order to make money. So you're not laboring for your income, but you're active to get that income. And you're still being taxed across your head because you still don't know the game, if that makes sense. You in the game, but you don't know the game. You don't understand the game. Because a lot of people who leave their jobs and just start a business, who's the 1099 self-employee? The landscaper, you know, the guy who's just cutting grass and cutting trees on the side. Let's say the painter, they do a couple rooms for $200-300. You know, the car detailer, the nail tech, they do hair, they sell apparel on the side. Most of them, even if they have a business, they went and got an LLC, they got an EIN, they still operate financially like self-employees. So don't think just because you got an EIN in a business that you are operating in the next income category. And there are a lot of people here, especially network marketers, because I always hear network marketers say, oh, I'm making passive income. No, you ain't, boo. You're not making passive income as a network marketer. You're not making passive income as a network marketer. Not when it is going to be treated like active income. This is a very critical mistake you're going to make. So you join an MLM, you join a network marketing company, you get your real estate license, you get your insurance license, you start cutting hair, doing independent contracting on the side, and you getting all these 1099s that's connected to your social security number. So you think you're making passive income because you got people in your downline. That income that is associated to your 1099 will not be treated like passive income. I'm not the expert, but I know better than that. It's not going to be treated like passive income. It's going to be treated like 1099 income, and you're going to get bust across your head. Believe that. So you gotta get that game. Okay? Now, this group of people are the hardest group of people to transition. Because people who are broke know they broke. But it's kind of like the people in the middle who they broke, but they don't know they broke. Because they may have certain things that have tricked them into thinking they're not broke. Because you can dress a certain way. You could drive a certain car. You could have a certain piece of jewelry. You could look like you got money. And those looks of having things have tricked you into thinking you are financially literate and you're better off than where you are. And the truth is you're broke. In most cases, people who like that are poor because they're poor mentally, which means we know they ain't got no money financially. So that's the second category. The third category is the passive income category. Passive income. And again, just because you have a business or EIN doesn't mean the income that's coming into that business through that EIN is considered passive income. You got to be careful with that. But the passive income category typically reflects business owners and investors who own systems and assets. So these are business owners